So, hello, welcome everybody again. Take two. I hope everybody can hear well now. One time I don't do the tech check from the beginning, and then yeah, it fails. So obviously, again, crypto getting hammered quite aggressive, and this was to be expected. We were at higher time frame premium. I was talking about this for weeks, and now it happened. Now the question is, can we catch some counter trend bounces? And usually price does not go down in a straight line. That's why I try to catch some longs here. I'd say stars are pretty much lining up right now. We have many majors hit. We have no perfection. ETH BTC is lagging behind. ETH dominance is lagging behind. But at the same time, there are enough majors in key areas at the range high, at the extreme here. So it's worth dipping the toe in, trying, dipping the toe in. I'm at 3% risk. Simply, we are at demand, we are at the refined area. As said, we also are in ETH euro in the area. We are in ETH pound in the area. Big demand, refined area hit. We also lost psychological levels on euro. We lost 3K. We lost 3K also on the dollar chart. This will create sell side liquidity simply because people getting scared because the psychological level is lost. So I think there are many reasons why we should be long, but at the same time, structure has broken to the downside. Higher time frame structure is broken, but as said, price usually doesn't go down in a straight line. We can expect some bounces, tradable bounces, and that's why I'm long. Overall, 3% risk. I have 1% in ETH. I've also shared AVAX and ADA yesterday. Think they also are at a nice spot to try to catch along. Pretty much it's the whole idea is still based on ETH, so I'm still trading ETH, but I'm splitting my positions up a little bit. Maybe we have some kind of outperformance here. Who knows? So playing those three pretty much as one position, meaning I'm now at 3% risk crypto long. And I do this while I'm still being short on BTC. I have not touched the short. I mean, it's in very big profits by now, but I hope and I try to trail this as far as I can. I TP'd 60% on this one, simply because it's from lower and I don't want to round trip all of my gains in case we bounce from here. But at the same time, as said, I try to push this trade as far as I can because I see it as very ideal to be short from up there. So long ETH, long ADA, long AVAX. Let's see how those play. Right now, to make it a little more local here, we are retesting the level. I mean, usually if it's a higher time frame reversal, it takes some time, right? We don't reshape within 10 minutes out of the area. So it makes sense to be a little bit patient here. If you can't handle lower time frame action because you think like, oh no, we're losing structure here and this and that, make sure to rather stick on higher time frame, let the level play out. Don't do things you're not ready for yet. But from a lower time frame perspective, we changed trend here, which is good. And now the question is, can we reaccumulate for a while and then go higher? And as said, for now, it's kind of looking good, especially looking at the daily. Look at this candle. Here's some volume spread analysis. We have increasing volume into the level, right? We have higher volume, but the effort gets smaller and smaller. You see, effort made, big candle, I mean, big wick as well, but big result. Next candle, big result, higher volume. And then we have the highest volume, but we have the lowest result. We have big absorption at the lows, meaning textbook volume spread down here. This is something I want to see in a level. Doesn't mean there's a guaranteed reversal from here, but it means like it is confluence. And this is what I'm looking here. And at the same time, as said, trend has changed. Sentiment is kind of bad. In general, most people got wrecked. So I'd say a bounce from here makes sense. Maybe not like something like this, but maybe into this area at least. And this still can be traded. Remove, like taking a small profit, removing the risk makes total sense. And if I take the stop, I take the stop. As said, I think there are enough signs lining up. Use the USDTD at range highs. So if you look at this, basically ever since we started entering this range in 24, we did nothing but like sell here, buy here, sell here, buy here, sell here, buy here. And this is all you should have been done, or we should have been done, right? So this was everything, not refining on the 21 hour or something like that. If you want to play the higher time frame game, you'll look at this, and this up here, this supply area, the range high, is a very optimal area to buy and to long. And this key area, the range low here, was an optimal area to sell or to short. And from this point on, if we don't like break out from here, the next logical point is the 0.5 of the range in my view, and this would provide a significant bounce for many coins. Would be nice, no certainty, but would be nice. We have also some volume spread up here, big wick at the top. Question is, can we now break out from here or not? I'm willing to take some risk for this idea. Same on USDC, massive range. USDC overall a bit stronger here, so it's actually making higher highs more than USDT. And question is breaking up from here, like this zone here. Once we break above this, here's basically nothing but air, so it will probably teleport to the 0.5. Please guys, tell me you can see the stream. Please, please. But nobody complained. There is no link to YouTube. You can see. Okay. Okay. Good. I wouldn't like a third time would have been too much for me today. So, yeah, this is what I'm seeing. Also, if you look at other majors, they are all back in this demand, like the usual altcoin movement, right? We have like a big pump and we retrace the full move. This is what we do ever since 2024, basically. Big pump, retrace from of the whole move, big pump, retrace of the whole move, big pump, retrace of the whole move. And this is why everybody says, this cycle is so different and this cycle is so hard and everything. It's simply because altcoins keep on retracing all of their move over and over and over again. This is what a kangaroo market looks like. This is what a kangaroo market really means. It means take profit at the range highs, buy back at the range lows, take profit at the range highs, and keep on repeating that until it fails. It's basically trading a range, and until proven otherwise, we can just go in and go out at the extremes. And right now we are back at demand, right? So we are back in this zone. So I'd say it makes sense to be on the buy side here. That's why I built my longs. That's why I took 3% risk yesterday. And I'm willing to pay a stop for being wrong. You see this consolidation here? I mean, actually the whole area, but this consolidation led to this big pump. And obviously if this fails, lower levels are likely, but again, we have still big demand down here. Maybe we go down here. We have a clean validation if our levels here fail, for example, on ETH. If this fails, most likely the only thing that's, by the way, missing is ETH BTC. So if we get the lower level, it's 11% or something, depending on what Bitcoin does. Obviously, it would mean like the lower end of this demand, or even lower if BTC goes down with it. And then we could entertain maybe the 2K level or something like that. But until then, we can trade this and we can try to get into some longs. And that's what I did. So, real quick about the SPX. We keep on making lower lows and lower highs, which is not really bullish. And this might affect the crypto market as well. Doesn't need to be like doesn't need to be already here at the beginning of a bear market. Especially the biggest thing I'm seeing right now is the increase in volume here. And if you simply like compare all prior bottoms with the volume, you'll see that the volume is always increasing into the lows, not into the highs, but into the lows. Look here, volume increase into the lows, volume increase into a local low, volume increase into the low, volume increase into the low. Now we have a volume increase back at demand. So who knows? Maybe that's our local bottom, and we go higher from here. I mean, the SPX is more or less trending upwards most of the time. So it is kind of risky to be bearish on it, because if you look at the chart, it's pretty much up only. But at the same time, at some point it will retrace, and we don't want to be on the wrong side of this trade. But a top could also form like first sell-off here, and then we make another high, like a little fake out here, going higher again. Something like that could obviously happen. And I'm still looking to get into some shorts. But as said, I also see like the potential of a little bounce from here. I will let the market guide me. We still have, by the way, we still have the daily level here. It's not really touched on the daily, but I think it was taken on the pre-market. Was it? No. Let's zoom in a little bit. Yeah, we have it's slightly touched. Yeah, anyway, we make like lower highs and lower lows. This is not bullish, and as said, once risk on assets go down, like stocks, it drags everything down with it. The indices are often telling. I'm still in this Nvidia short, still with stop loss at break even, still not TP'd. Might be a mistake, might be round tripping here, but if not, it could turn out to be a nice swing trade. I got stopped on Google because it simply doesn't want to top, but that's all right. I re-entered once because I saw this as a swing failure pattern. I got stopped again, so no re-entry for me here. At some point it will top, and it would be nice if I'm short with it, but I mean, you can have it all. Wheat long, nobody cares about it probably anyway, but I'm long wheat. I TP'd on the soybean position here in the gap. Ever since then, you see those little gaps, very powerful levels on TradFi. Ever since then, it rejected a little bit. I reallocated those profits into wheat. So we got a real farmer here. And we have still the gold short. Looks like me like a very parabolic kind of top. So if this is first top right shoulder, maybe going down from here would be very nice to have this swing short from the top. So this is pretty much the whole market outlook. As said, most exciting right now in my view is crypto. This is where most action is right now going on. I mean, this is look at this downtrend and look at this. It's happening over and over and over again. It's not like something new, and people are so dragged into the belief that everything needs to play out like in 21 and alts need to do this and need to do that. But in reality, they just need to do whatever wrecks the most amount of people, and like everybody expects like crazy what's the name? No, I forgot. Like a crazy trending market of crypto, but in reality, it's doing nothing else but ranging, and it's doing this since 21. Basically, we went up, down, up, down, up, down, and now we are back in an area where we want to be on the buy side, in my view. And then, obviously, if this is playing out, we want to be on the sell side again. And we don't need to, if you're not comfortable trading with leverage and stuff like that, you can simply do this with spot. I mean, I trade leverage, for example, the positions I take here, they are often with low leverage. I mean, in this case, it's it's 5R actually, 5X. And it for me, it has several advantages to not doing this with spot. First of all, I need less margin. Obviously, I can use this money for other things. Second of all, I can remove the whole margin, have even all of my money back while having this position open, risk-free more or less. And at the same time, I have a lot more control because if I buy spot and if I move it onto my wallet, it's there and like until I've sent it, and we all know how spot really is. And then it's like, let's just keep it for a day longer, maybe bounce from here, and then it's like 10% low, and it's like, oh my God, what did I do? And this is not happening on perp because you have clear invalidations, you have a hard stop set usually. It gives you a lot more control, and that's why I do it. But I don't need to get into positions like this all the time and like 10R and whatnot, and then no. On 20x leverage or anything, I don't need to prove anything. I'm here to make money, and if I can catch a solid 3R trade, that's great. Maybe I can even tighten and add on confirmation. For now, I don't get like those signs here on those lower time frames. It's actually looking a bit weak. But I still here accepting the higher time frame risk until the level holds, it holds. And if I can't add, I simply can't add. I don't need to. And if it's just a 3R trade, then it's just a 3R trade. I mean, it's still a nice performance. And so, yeah, trading doesn't need to be hard all the time. Oftentimes, and especially like many beginners sending me setups, 10R trades, like the stop loss like this, and I wonder why they have a win rate of 25%. Yeah, if you don't have the knowledge and if you play your setups this aggressively and this tight, obviously it's going to be harder, right? And so I like to keep it relaxed, keep it a little bit chill. play it a little wider, as said, adding, tightening on confirmation, and I'm rather here making consistent money than one big money and then five losses in a row and all that. It simply doesn't need to be hard all the time. All right, weekly recap done. We had a question about order flow. I've prepared the Velo chart here. Yeah, it's you guys see Velo, right? Correct me if I'm wrong. So very simply put, Velo is Orderflow, is a order flow software for free. It's just Velo X Epsilon Z, and you can use all those functions for free. I don't really use it a lot right now, simply because it doesn't give me amazing signals, great signals. It's a little bit weird right now. I don't know why it is. Maybe it's my fault. Maybe it's my problem. I don't know. But right now I don't use it a lot. What's actually kind of interesting are liquidations. You see, we have obviously like crazy, crazy liquidations, um, long liquidations here every other week, basically. And another thing that's very obvious is that open interest, ever since the top, open interest is pretty much collapsing. I mean, we removed 80 billion from Ethereum here. And yeah, I mean, look at price action. Who is surprised about that? So what I do usually, sometimes order flow gives very, very good signals, sometimes not. And it's very important that you know when your edge is working and when not, because if you force something while it's not like the right time to do so, it might just hurt your performance. And we don't want that, right? So know when something is good and works and something not is key. I can show you an example where, for example, order flow was one of the biggest edges for a whole swing. And then we look at it right now where it's not really a big edge. So what I do usually, a little brief overlook about what order flow is, because I don't know if everybody is familiar. The thing is, I've talked about this probably 100 times by now. So just go through all live streams recordings where there's order flow in the title, and you will see I'm telling the stuff like over and over and over again. So if you lack the basics, you can watch it in the recordings. It's all there. At the same time, just to make it like clear for everybody what I'm talking about now, this is funding rate. It's longs against shorts. So if this is green, we have more longs in the system. If it is red, we have more shorts in the system. Basically, what this is telling us, if the market is overexposed on the long side, it means the market is most likely to go down to take those people's liquidity. If the market is overexposed on the short side, we most likely gonna go up to take those people's liquidity, because the majority of people is always positioned wrong. And so we can use this as counter indicator. And if you see at, for example, local and Pico tops, funding rate and open interest spikes usually aggressive because people aggressively open longs in such areas, and then they get trapped and wrecked, and then price goes down. So those buyers get usually trapped at the highs, and then they get pressured, and then they are the fuel for downside because they get liquidated on the way down. So we have the same thing happening sometimes on the opposite side. So once the market is bottoming, you will see that funding rate is turning red. And this is very rarely and very occasionally only, because as you can see, the market is usually, the whole funding rate is usually green. So the market is usually more long. And who's surprised about that in crypto? And also looking at like structure, I mean, we go up most of the time, so it makes sense to be more on the long side. But once people turn too bearish, it's usually a bottom sign. And we don't talk about like the perfect absolute peak or bottom here. It's rather like we are entering the area of a bottom. And right here, you see in April, March, April last year, even though this was a local top, like funding rate was negative, and it was negative here, here, and here, and here, and here. So people were exposing themselves short. And this doesn't mean they have their stops immediately above this high. Maybe it's here, because maybe those are swing traders, right? We don't know. We don't know what leverage they use. We don't know how big the position is. of single traders, and we don't know where they have their stop loss. We can just guess, but think about where retail puts their stop loss and where we put our stop loss, usually above some highs, above some structure. So you can expect the further price goes down, the more liquidity is building above those highs. And now we bottom here, and on the way up, funding rate turns negative again. And I was very vocal about this on X because so many people were like, oh no, we need to go down to 72K. We need to take the liquidity and blah and blah. We don't need to do anything. It's a market. Everything can happen. And so we bottomed here and we went up and people were super bearish. Why? Because they didn't get filled. Because there were a lot of people were waiting for lower prices, and logically people, or logically not the opposite, like people forced then their bias. Why? Because like they were wrong, and nobody likes to be wrong, nobody likes to be sidelined. What are they doing? They find arguments for price to go down, not because they are arguments, but rather because they want price to go down, because they try to force their bias onto the market instead of letting the market tell them what's going on. And you see, we're starting to move out of this range, and funding rate turns negative. We have spike in open interest, like open interest spike means new positions are opening. We have a drop in funding, meaning people shorting into this, right? They're short into this pump here. They're short through this little small range. And what happens next? Like they're short, they're even short here. And what happens next? We pump again. And now we take the liquidity of the people putting their stop here, putting their stop here, and even putting their stop here. So this move pretty much took all the liquidity on the way up. And you see those little green spikes down here. These are liquidations. And what happened? What happened here is that with every of those moves to the upside, we liquidated all of those shorts. And we talk about 170 million here. $170 million on those moves up. And this is exactly what market makers and whales want. They want to have cheap moves to push price higher, and they market order price until those shorts get pressured, and then those shorts need to cover and they become forced buyers, forced liquidity, because they get stopped, liquidated, whatever. And so they become buyers. They need to buy back those coins that they shorted lower. And this happened all throughout here. Again, we formed this bigger range here. And again, funding rate turns negative. And what did we do again? We spiked again here, and we liquidated here in one single daily candle or 12-hour candle. We liquidated 300 million in shorts. And this is what happens on the way up. And on the way down, after a prolonged range, people get more and more bullish. Everybody finds reasons why it's bullish, why we go to 150K and all that kind of crap. And then suddenly everybody's long, or everybody starts to long, mainly at the highs. You see open interest increase, funding increases into the highs, lots of longs get trapped, and see what happens next. Swoosh, all of them getting liquidated. Biggest liquidation event ever. 1.5 billion on BTC alone in one 12-hour candle here. And then you see after that, every move to the downside again liquidates people. And we can see simply, it's very simple, because I told you, people start shorting here, so they put their stop below above here. Once this goes higher, people start longing and longing and longing more and more and more. And where do they put their stop loss? Right here, below here, below here, below structure, right? And so every time the market started ranging a bit, people go long, people start putting their stop loss somewhere, and on every move down, they get liquidated. They become fuel for the downside. They become forced sellers. And this is what whales use to push price lower. And at some point, they liquidate so many people, or have liquidated so many people, that they can fill their own positions. And then the game starts all over again. We go higher from there, and we start liquidating shorts once again. And this is pretty much the whole trading game. And you want to be on the right side of the trade. And it's not what the majority does. And order flow can be your tool to define what the majority is doing right now. And as said, after a while, you will look at structure and you will suddenly see where they have the liquidity. For example, another big point of interest is going to be this low. Oops. Give me the brush. It's going to be this low. Why? Because many are going to look at this as the higher time frame key low. So once we smash this, many people are going to sell. The bull market is over, structure is broken. You will see a lot of those kind of things. But know that here is a demand zone. There's also the untouched 2-day. And while this is indeed this is like higher time frame invalidation. I mean, you don't want to wait for this to invalidate your idea of the market maybe topped, because if you don't sell here and you take this as invalidation, you're already 40% underwater. So we don't want to do that. We want to have early signs somewhere here and here to get like early structure breaks. You sell here and you miss like 30% of this paying back your gains. This is what we want to do. We want to get early signs. But in reality, this is higher time frame structure. And once this is broken, the bull market is truly like confirmed over. And many people will see this as that. But what most likely will happen once we do that, so for example, let's imagine we do this, and many people get bearish and sell. What do we want to do from a market maker perspective? We want to push price higher again to make everybody that sold here chase this move, start buying again. And what do? In the end, they buy in the top range again. This is where whales want to unload the higher time frame positions. And so once people start chasing into this move here, they buy again in the top range. Whales can unload. Price starts maybe nuking again. And this would basically be the perfect trap. And at some point, this kind of counter trend bounce will occur, maybe sooner, maybe later, maybe from here, maybe from lower, maybe from our current price. But this is why price is not moving in a straight line. This is why price is reversing at some point to attract buyers again in this case. And as said, order flow can be used to make these things visible. So I think this answers the question about order flow. Unfortunately, PPQQ is not here right now. Yeah, and we wanted to talk about what order flow is doing right now. And as I said in the beginning, it's not giving me great signs right now. Overall, it's pretty balanced. I mean, obviously, as said, open interest is nuking. And ever since here, open interest is pretty flat right now. We have a slight increase in longs on this way down, nothing major, nothing I would like consider a clean signal. And also on the way down, now funding rate gets negative at times. The thing is, higher time frame trend is down, so a negative funding rate doesn't mean as much anymore. We can also look simply for this topic. We can look at this year. So once, as long as higher time frame structure is up, negative funding is super positive for price, super bullish for price. But once higher time frame structure is pointing down, negative funding might lead to a local bounce, especially if it's bigger negative funding. But it's not like the same kind of signal as on the way down, on the way up. So those kind of, once we have this break of trend here, making this first higher high, higher low, higher high, those kind of negative funding moments are highly bullish for price. And so also here theoretically, but also breaking structure here was our signal that this is not a good signal anymore right now to be long, especially because it's in higher time frame premium. So we need to put everything into context. Oh, this FIP is looking funny. But now we are diving below the 0.5. So being on the long side, being a buyer becomes more reasonable again as being a buyer in higher time frame premium. Okay, that's it. That's basically answering the question, at least I hope, PPQ. If not, let me know. And other than that, you can ask some questions if you have some, because I'm pretty much done with everything I wanted to say. MicroStrategy, exactly. I was looking at this morning as well. It's in a nice level. It's back at demand, and it obviously came back quite a bit. So yeah, this would be a nice area. I don't long it simply because I have three crypto longs and I don't know what MicroStrategy is doing besides Bitcoin. And if I buy it here, it's pretty much like adding more risk to my crypto positions. And I don't want to do that, but it's Confluence. And Coinbase also in this demand here. Question is, no, we didn't lose it. Yeah. So things usually don't go down in a straight line. Maybe we have some kind of bounce here. Could be good for the crypto longs. Last week, market structure. Yeah, yes, sure. You were asking about market structure. So let's take a blank chart for that. Yeah, no, almost. Okay, market structure. Very important stuff. Like I think many people are really sleeping on market structure. And the more people I talk to, the clearer it becomes that many people really have no real understanding of market structure. They know like high highs, high lows, all this kind of stuff, but they're so like sucked up with refining that they miss often the bigger picture. And the bigger picture is so important because as I said, I think I said it last week as well, higher time frame structure like supply and demand is so much more powerful than some crappy 21-hour in premium of the higher time frame swing and all that kind of stuff. You need to put everything into context. And the context of ETH is simply that this is a big range until proven otherwise. And everything that happens within this range, in this case, I could draw a big range to make this point a little clearer. So big range. Everything that happens on the top side of this range is premium. This is higher time frame premium. No, premium. So, and everything that happens down here is higher time frame discount. Up here, from a higher time frame perspective, you want to be on the sell side. Down here, you want to be on the buy side. So very simple put, longs down here are way more optimal than up here. Never forget that. Even if you take a long up here, and it is from according to this swing here, according to this swing, it's in discount, but according to the higher time frame context, it's not. And people usually look for for high probability setups, and that's why they refine and refine and refine, but they miss the bigger picture. And the bigger picture is very, very clear. Everything that happens on the upper side of the range, everything that happens also from this swing above the 0.5, if you want a long there, it's not that optimal. You can obviously, but you shouldn't like expect the same kind of reversals that you can from like higher time frame discount. And this is like one of the biggest and most important market structure rules. So have the bigger picture in mind. Don't forget that. You can trade a lot of stuff, but don't forget the bigger picture. And then you want to look for the trend. The trend, for example, from here on, let's remove this range here. So we know here we are in premium, right? That's what we just like figured out. We have some kind of double top here. Maybe you don't want to sell here. Maybe you expect higher prices like many did. And then this happens. What is this telling us? It's telling us that the trend is changing. So we have an uptrend, right? We have from here on, we have high highs, high lows, high highs, high lows, high highs, equal low, higher low, whatever you want to call it. Okay, we can't really take out this high. And after we have this weak high here, we make a lower low. I mean, there was not a more obvious change in trend than this. And you see, it's as simple as that. On higher time frame, you can easily form a bias what price is doing next by simply looking at market structure. And once this was broken, like you maybe didn't sell the Pico top, but you maybe like you sell here for 20% lower, but it's still better than getting fearful down here and selling for minus 60%. So if you don't miss out selling the top because you like don't accept that this is supply, you might just wait for the signal and then you know, okay, structure is turning against me. I can't like force my bias. I can't like hope. I don't, I shouldn't do all of those things. I just should I just should let structure tell me what to do next. And in this case, structure was telling me, okay, it's going down. And the next lower low was still the confirmation. Like here again, lower high. And I mean, technically defining a lower low here within this area is pretty ugly, and they design price in this way so you don't get an easy signal. But with this weak high and the next big sell-off and no strength and another lower high, you could still sell here. It's still like the same than here. You see, it's still the same price more or less. You have a lot of time to get out. It's not that you need to sell the Pico top. It's nice if you can, but you don't need to don't get wrecked. And same story we have then on the way down. People, the funny thing is people get wrecked here and they get wrecked here because, as I shown you in order flow, people start suddenly shorting down here. Whoever, whatever their target is, I don't know what it is, but people do that. And I mean, ETH is obviously looking a little ugly here. It's harder to trade than BTC because it was this kind of move. But technically, from this point on, so we had this low here. This was our high structure, so we could mark this or this. And we made, from here we made a low high, and then it did this. So this was not like really predictable that it's going to be this violent, but this was our technically our first high high. So let me mark this out. Where's no, where's the brush? Give me the brush. Oh my god. Yeah, here it is. So as said, this, maybe even this. So this little area here was our high area. We broke it. We made a higher high, which is then this or this in yen. And then we made a lower high. And from this point on, we know, okay, structure has changed. And even if you were bearish down here and you didn't buy, you could still decide to go to become bullish here simply because structure has changed. I mean, as said, ETH was a little harder to read here as BTC. But if you bought here, for example, within this range because you accept structure is changing, you could still ride a 100% move or something like that. And then from here on, higher high, I mean, not really low, but again, higher high, higher low, higher high, higher low. What happened here? Ooh, lower high, a lower low. You see this? Oops. Now I get a little bit confused. Give me the brush again. This was broken, and then we failed to take out this high. So we changed structure. Uptrend, right? Downtrend from here on. And if candles are confusing you, you can also simply sometimes, where is it? You can simply sometimes shift it to a, oh my god, go away lines, to a line chart, and you will see, like from this point on, we made a lower high, and we made a high, no, a lower low and a lower high. And that's it. Structure has changed. And if you stay bullish, then it's on you. You try to force your bias, and the structure is already telling you, okay, there's shifting something, and selling within this range here is the goal. It's not selling up here. It's not that you need to sell at exactly this price. No, you want to sell within the top range, like the whale. And once the structure is turning against you, you should use those pumps to get the fuck out with the rest of your position. And if you miss that, you could still sell somewhere here. And if you bought within the bottom range, it's still a nice performance. It's still either like 80%, and if you were brave and bought down here, it's still 160%. It's only expecting moonshots, forcing bias that leads to total devastation, to total wreckage. And if you read market structure, the higher time frame game is actually not that hard. It's simply about being disciplined, about um, accepting the reality that structure is changing at some point. And I mean, look at this clean daily body below here. This was really the first sign. And then, as usual, this is what I was telling on BTC, the 72K level. Once we lose it here, structure is lost. Many people will get bearish here, and that's totally fine because you don't know if this bounce will occur. But this is what market makers usually do. They make price bounce after such a break so that everybody that's sold here feels like an idiot. All those people saying, oh, ETH is going to 10K, they can say, I told you so, don't sell, it's not breaking down, it's faking down, blah, blah, blah. But yeah, indeed, this was, especially like with here, no break of this high here. This was the confirmation. So this is the first like confirmation, but you get your total confirmation. So if this is going higher from here, closing above, then you have a conflicting signal. But this was a very clean signal to get out or to take a short or whatever. And as said, this is what structure usually does. We also had a lower high, a break of structure here, which was like me also TPing on some positions simply because I trade structure and I don't need to be perfect to make money. And the same thing happened here already again. But this was in discount, so this was not concerning me too much. And this was concerning me a little bit. And this like was for me like, okay, maybe because it happened 2 times before, you think like, maybe this time is different. But you never know. You never have certainty. But I trade structure, and to me, this was the sign to sell my altcoin holdings or a good chunk of my altcoin holdings. And so this is market structure basically. And if you're still confused with market structure, then apply it on higher time frame. Don't apply it on lower time frame if you're still lacking higher time frame, like a good higher time frame reading, because this is the easy part. If this is confusing you, then lower time frame will wreck you. And also, altcoins are trading way uglier than, for example, Bitcoin does. So if you, for example, look at BTC here, like the absolute bot, if you miss out to buy here, maybe you say, okay, good, this is like, it's simply just going down lower high, lower low, lower high, lower low. And within here, you maybe want to buy within this range, and you buy small because you don't want to like catch the falling knife. But after this point here, we make a high high, we make a higher low, we make a higher high, we make a higher low. Yet people were calling all the way here, people were calling like it's going down, 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 down. Sorry, it's going up. Um, everybody is going up. And once structure changed, if you remember sentiment, if you were around, people were like, no, it's going to 22K. No, this is not it. This is not it. Only after here, people were suddenly like, okay, this is something. Okay, there's something happening. People were super bullish. They got dragged. And then we had the biggest move of the whole cycle, basically. And as said, you don't need to be perfect on the higher time from spot game. You don't need to be perfect. You need to be good in reading market structure. And structure changed here. We had this higher high, we had this higher low, and you could still buy within this bottom range. And who cares after 3 years? Would you really care if you bought for 20K, 19K, or 16K? I bet not. And also to get an early sign here, this, oh, it's actually not that clean on this chart. Like we broke this here, we retested it, and also the downtrend here with this, it was basically confirmed. High, 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 low. You can use trend lines to really read market structure. And we have this in every single bottom. Usually what crypto likes to do and what many assets like to do, they make people very bearish. And suddenly the first move out of this area, this is so violent to not give people an entry. You see, no real pullback, no real pullback. I mean, this level was actually very nice to trade. But on those aggressive ways up, we usually then get no pullback. And you want to get early signs. Same as on the way down, you want to get early signs here as well. We technically entered a downtrend within here, breaking those, going lower, right? Lower high, lower low, lower high, lower low, lower high. Not really a lower low, so first difference here. And then higher high, higher low. And if you miss to buy here or long here, this is your chance. You will always get the chance. On every single asset, you will always get the second chance. Sometimes it's also simply like that, especially in altcoins. They seem to go down forever and then suddenly they pop like this. Not very easy to get in, but that's why you should also pick the right assets to trade. Some are easier, some are more complicated. And here was a change of trend. You could go long and you would still be in for a very nice move. You don't need to be here at the absolute bottom. It's great if you can, but often it's also wise to allocate yourself a little bit, and then once you get confirmation, you add to your positions. Same here. So right now it looks like it wants to go down forever, and maybe it will. Maybe we even sweep this here. This is what I meant. Sweeping this, making everybody bearish, bouncing from here, very likely. And we could also now reverse from here. We are back at this demand, right? We are back at this demand, and lot of where is my arrow again? Brush, brush. Um, we are back at this demand, so we could also do something like that, and maybe we go way higher, but until then, you should should structure lead the way, simply because if we can't like break the 0.5 of this range, we can't expect like the range high. If we go to the range high, that's nice, but without breaking the range high, we shouldn't expect like higher prices than this. Only if this breaks, maybe a retest, we can expect higher prices. So everything in this range is a key area. The range high is a key area. The middle of the range is a key area. And right now here, the range low is a key area. We want to go long at the range low. We want to TP, best case here. If it rolls over, we get stopped at break even with the rest. We want to definitely TP here. And if it breaks out, we can trail the rest. And you can apply this. This is like pretty straightforward, the simplest market structure approach I know, because you have a range, you have a swing, you TP at the 0.5, you TP at the high. If it breaks out, great, you can trail. If not, you TP'd already, you get your trailing stop gets hit or a break even or whatever. And also, obviously, why is the brush always disappearing from here? This could also simply just fail, and we do the same thing maybe from here. Who knows? But for now, to me, it makes sense to go long at the range low. And if this structure is breaking here, we maybe get this bounce, but then the doors are open for even lower prices. But this remains now our key low for the structure. Max, considering S&P isn't looking like BTC did, upside with no higher time frame support, won't that also get a correction like BTC did in the near future? Only respect to market structure feels so wrong. You need to consider that the SPX is a very, very different asset class than BTC. Why? Because people are saving their pension fund into the SPX. This is why this chart is basically up only forever. The whole structure is behaving so differently because millions of people DCAing into it, having their pension funds, big institutions like managing wealth of rich people DCAing into this every single month. And this is why you can't compare with BTC. BTC is a high risk asset. It's a very volatile asset that needs to be traded more. And this is an investment class asset. It's behaving quite differently. And so if you see a 10 to 15% correction here, technically a 15% correction is a bear market for the SPX. It's not like in crypto, don't need to expect 80% corrections. And a 15% correction is already a large one. So if this is happening, if we come back to this area, I will definitely be a buyer. And to me, it makes like perfect sense to like get in here. And if it doesn't work, I can still get out and try lower again. But as said, look, you just need to zoom out on the SPX to see that it's a very different structure than, for example, BTC. Oops. You see, like this is very different. And maybe BTC will become something like that at one day, but for now, this is the main investment class, and BTC needs to be traded. And then if you compare it even to altcoins, like we have seen on ETH, the higher the risk, the more you need to trade it, the more profits you need to take, the more skill you need to have. And as said, this is something you can also DCA over a long time horizon. I mean, maybe it's getting a bit overheated, like for now. But as, for example, said, 10-15% correction, 20% corrections are big on the SPX. And look at where the SPX corrected every single time. Back to the 0.5, up, back to the 0.5, up. COVID was the exception here. So if we go back down to the 0.5, which would mean from the top, it's a 15% correction, and even a little bit lower this time, maybe to the trend line. Who knows? It's a great correction, and in my view, we should try to get into higher time frame investment positions here. I agree, market structure is so important. I think it's the first thing you need to be able to think one, two steps ahead. Exactly. And market structure alone, if you really understand market structure, it's basically, in my view, the key to everything. Because if you properly understand it, and if you then apply the order flow, the mechanic stuff of the market, the buying and selling stuff, like I was showing here at the 72K level, how people most likely are going to behave around this key level, it's a key level because many people look at it, and many people will get bearish here. This is why it's creating liquidity. Liquidity is not something that magically appears. It's people making decisions. It's humans getting emotional and stuff like that. And so key levels are placed like on a tactical uh like on a tactical spot to create behavior, to create emotions. And if you understand market structure, you will see that all of those highs and lows, they are they're placed at very strategic points. This is all by design. And market structure is the key to understand all of that. In my view, it's the most important part. Instead of waiting for confluence and key levels before entering a trade, do you consider to wait for a mid-time frame break of structure and change of character and enter after that? Talking about market structure. This is what I usually do. So you need to make a difference between a semi-optimal level and a very optimal level, because if it's very optimal, if down here, I don't like waste my time refining too much. Obviously, I try to get into some leverage positions, but my main focus is to acquire as much spot as I can. And I also had this discussion with one guy down here. Oh no, the 2 month level is lost and all that and this and that. Who cares? The ETH is at higher time frame discount at demand. Everybody's bearish. Everything was bearish. The whole world was going down because of tariffs, and I don't I want to buy as much spot ETH as I can. For a refined approach with like leverage, tighter stop losses, you need to be um, a little more precise, let's say. And for this, you can use, as I've shown before, trend lines. You have this trend of break of trend here. So this could be like the first higher high. We don't need to catch the absolute bottom. We can also go in here, have our stop loss below the slow or something. You can use those as execution tactics. And for this, you can also go into the study area and watch my execution tactics, because there are many. And for now, I see this level as semi-optimal. It's not perfectly optimal, but it's semi-optimal. So I'm in. And with this break of this trend line, I added a bit size with those altcoin positions. As said, I see it as the same position basically. But without this change of trend, I see no reason to get in. This is not me like saying this is 100% certainty after this trend line is broken that we go higher. But without this break, it's still just grinding down, eating the level. So there's no reason for me to go on full risk. But with this change, and then also now the question is, can we form higher highs from here and higher lows? And if we can, I can also decide to add some size within something like this. Maybe it's a bit more aggressive, probably looking like that. Um, then I can decide to add size here if this is my plan. But for now, I'm pretty happy with the position, like with my positions like they are. It's not that optimal, but on higher time frame, like BTC at 20K, you wanna size in here. Definitely you wanna buy, and maybe you keep some cash, you keep some powder dry, because nobody knows. It could have gone down further, right? It could have nuked to 10K or whatever. But it didn't. It did instead did do this, and here's your opportunity to add size. If you missed it, here's your opportunity to add size. And in the end, if you bought below 30K on size, you would have been like a big winner right now, right? So in the end, nobody cares like about the perfect price in the end. And you can use market structure to minimize the risk of, because all in is never a nice option. Not because you can lose all your money, but also because of the psychological pressure it creates. Because once you're all in, your mind will basically look for reasons why price needs to go up. Why? Because you can't act anymore. You're like 100% in. If it goes lower, that's bad for you. And so you will look for reasons why price needs to go higher. And it's always bad to be biased. So I would, for example, buy with 50%, maybe even a bit more, 50, 60% of the size I have, trying to get in as low as I can. And once the structural break confirms, I can add the rest of the size I want to buy with BTC, because then I have confirmation and I have a clearer invalidation and all those things. Oops. So to sum it up, I think market structure is the most important key to this game. So really understanding it, really understanding how market structure creates liquidity and all of those things, and using it then to refine entries once price is there. Because too much refining in the level, like too much refining before the level hits, makes no sense for me, to be honest. I want to see how price action develops once we are at the level, and then I can define if I want to add size, if I want to play it on bigger size, smaller size. All of those things are, in my view, only really possible after the level is hit. And so to sum it up again, most important is higher time frame structure. Make sure you understand if you're in higher time frame premium, if you're in higher time frame discount, is the level you're looking at truly as optimal? Because here might be a nice long level technically, but it's, if you understand structure, you should never size as big as, for example, here, here, or especially here, right? So this should be a lower long, targeting those highs, maybe a breakout, maybe adding size to a trend, but overall it's definitely not as optimal as here, here, or here. The most optimal begins here. Why? Because it's in discount. And I actually can you show another great chart example. For premium discount, people usually enjoy this chart because this is knowledge that pretty much works on every asset, every chart. You have, like, we have this move, we have the high to the low. This is our new range, our swing. This is the 0.5. Everything that happens below here, discount. Everything that happens above, premium. You want to sell premium, you want to buy discount. You want to sell premium, we didn't really get there this time. You want to buy discount technically. Even though I wouldn't like right now, so you need to put it into context, obviously. But this buying Doge down here, really in this, all of this accumulation demand area, this is optimal. Not here, not here, maybe here, a little more optimal than here, obviously, but this is context. And this context needs to be put, so Doge needs to be put into context of BTC and majors. Again, premium discount rules, all that kind of stuff. And this is how you find the highest probability setups. Internal, external structure, yeah, pretty simple. This is our external structure. In this case, it's our major structure, our major range. External. Internally, there are swings forming, and you have this smaller range here from up here to here. This is now the internal range. And you see how I drew the red boxes? This is our external premium of this range, external structure. We formed internal structure, and internally, this is also premium. And you see those two overlap here. So this is like premium in both of them, and this is discount in both of them, internal, external. And this works for all kind of time frames. If I now zoom into this, we have again internal, external structure. So this is also internal swing of this external swing, of this big external swing. So up here, you want to be a seller. Down here, it's better to be a buyer, right? On a higher time frame now. Any higher time frame price level for Doge? You mean for spot buys? Yeah, as said, so I mean, it's in discount of both ranges. So down here, it makes sense to be a buyer. But I base all of my altcoin trades on majors, on ETH, on BTC, on the SPX. Everything tends to move in cycles, everything tends to move together, risk and all that. And so if, for example, Doge comes back down to this area here, like below 10 cents, it makes sense to buy some. if, for example, BTC also is close to its level, if BTC is still at around 100K, this whole thing becomes a little bit more uh, a little bit worse. What's the word? A little bit less optimal. That's what I wanted to say. So I hope this answers basic questions to market structure. I mean, we could talk a long time about this, and usually it takes some time to internalize. But as said, market structure is truly one of the more important parts of the game. So make sure you understand it properly and make sure to always have the higher time frame context in mind. Don't get stuck into like you obviously can take like you can play Rumbo and take all levels you find, but if you want to have high probability setups, if you don't want to spend all day in front of your computer and all that, make sure that you understand and put everything into higher time frame context because as said, now with ETH and majors coming below the 0.5 coming into discount, everything you take on the long side becomes more optimal. If you played every long level up here, you can do that obviously, but it's less optimal. It should be played on less size and you should expect less result like smaller targets, less overall percentage moves and all that because it's not that optimal up here in resistance, in supply, in premium, than now down here in demand. And if you put it into this context, you will see that your probabilities and so your win rate will go up significantly. Great. So, if there are any important questions left, you can ask them. Other than that, I'd say we're going to wrap this stream up. Enjoy our Saturday, enjoy the weekend. Yeah, appreciate you guys. It's a lot of fun, and actually, it's nice to be able to give something back. It's it feels good, and actually, this is why I started this account, and I'm really enjoying doing those streams. I wish you guys have all a nice weekend, and we talk next week. Bye bye, guys.